This is Financial Tech and the Guide Rock Capital Management weekly commentary for the week of February 11th, 2013. I'm your host, Jim Collison, broadcasting live from the AverageGuy.tv studios here in Bellevue, Nebraska, and we post the show, including written commentary, each week out at the AverageGuy.tv. This weekly podcast brings you market commentary from Andrew Hunt, CFP and president of Guide Rock Capital Management here in Omaha, Nebraska. If you'd like to receive the commentary in advance, you can just send him an email, andrew_hunt@guiderockcapital.com, and put subscribe in the subject. If you have questions or comments that we can read or answer on the show, you can send us an email. Just send that to podcast@theaverageguy.tv. And, of course, you can find us both on Twitter. I am at Jay Collison, and Andrew is at Andrew D. Hunt. If you're new to podcasting and you like an easy way to listen each week, you might want to consider using Stitcher. Available on any browser, both for Android and iPhone platforms. It's a great way to listen to your podcasts, both at home and on the road. This show and all the past shows are on Stitcher, Stitcher.com. Search for Financial Tech. It's education for your ears. Andrew, we missed last week. It is great to see you back here this week, and we're early on a Monday. We've got the market commentary. Give me, first of all, how are you, and what's going on in the markets?
I am just fantastic, Jim. And yeah, you're right. We missed last Monday. We just couldn't make travel schedules and personal schedules work. So glad to be back. On a side note, had a very nice weekend myself, and glad to be back at it on Monday. Yeah.
Good. Yeah. Very good.
So the markets, well, much like a climber, absolutely determined to meet the pinnacle, the peak of the mountain, the stock markets just continued to move higher last week, which I feel like Groundhog's Day, saying that over and over. And for those of you who paid attention, looks like we're going to have spring early this year, so that's good. The groundhog did do its thing, and it looks like we're going to get spring early. So, but I feel like Groundhog's Day because the markets just continue to rise. Last week, still continuing signs of strength in the U.S. We saw the trade deficit narrow in December, which is generally a sign that the economy did better than expected during the fourth quarter of last year, which is great. Germany had a surplus, and it was its second highest in more than 60 years, which is a sign that their economy is a really strong, and they're kind of the linchpin in the Eurozone, so that's a really big deal. So positive economic news tends to hurt gold futures, which we saw last week, but it made riskier assets like stocks really attractive for investors, and that actually pushed equity markets to market highs during the week. So there was a massive snowstorm on the East Coast. I don't know if you saw it in the news, but like 2 feet of snow out in New York, and of course that affects the markets. And so even with that bad weather, which generally affects trading, the Nasdaq closed at a 12-year high last week. The S&P 500 reached a 5-year high, and that was the 6th consecutive gain for the S&P 500 for the week. So it's just continued to rock and roll in the markets. But there's some kind of mixed signals continuing to come from the Federal Reserve, which is those who are doing the quantitative easing programs out there. Last week there was a symposium at the St. Louis Federal Reserve, and Fed Reserve Board Governor Jeremy Stein kind of made some comments that indicated that Fed officials are concerned that ongoing monetary policy could make bond markets overheat, which is kind of interesting because that reinforces the idea that the Fed might be tightening down on credit policies pretty soon, which ultimately, you know what that means? That means interest rates could rise in the future and could, some of those variable rate loans that people have out there, and could definitely affect bond prices, which is pretty wild. So we're definitely going to keep an eye on that. For the non-market piece of this today, we're kind of going a little bit different. So Susan Boyle, who's the famous Scottish singer that was discovered on Britain's Got Talent back in 2009, recently announced that she's got plans for her funeral. Apparently she wants everybody at her funeral to be laughing because she's going to have Nellie the elephant played during the service. Pretty interesting news coming out there. But that led me to start to think, whether you're when you're talking about the funeral industry, there's a lot of things that are going on in terms of pre-planning, prepaying, and personalization of funerals. And so, if you've got a parent who's getting older, or if you're getting older yourself, I just thought it would be kind of interesting to talk about why would you even consider choosing a plan to pay for your funeral ahead of time. So I came up with 4 reasons that you might consider doing that. The first one, of course, is control. The only reason you would prepay or pre-plan your funeral is to control the whole deal. You can write down information about what you want in your obituary. You can have instructions for the burial or cremation. You can talk about organ donation. Then you just got to make sure that you give it to the loved one that you want to execute your wishes. Second reason would be for negotiation purposes, I suppose. Turns out that grieving family members are rarely very good at negotiating. So maybe by planning ahead, you could try and get a better deal on the funeral. Turns out funerals are pretty expensive, and so you could try and negotiate a price that would be guaranteed on a plan with the funeral home. You could also get some price increase riders, or what happens, change your mind type situations. So negotiation, that could be a reason. The third reason could be goodwill. You just wrap up a bunch of the unanswered questions. You might pay for the funeral through a trust or an insurance policy, but ultimately you've just guaranteed that the expenses are going to be covered, and it really reduces the stress associated with the passing of an individual. And then finally, the last reason, much like Susan Boyle, would be to personalize. So she wants to have a specific song played at her funeral. Maybe you want to do some of these kind of hot topic things that are out there, like a cremation, or a green burial, or mummification, or cryonics, or a memorial space flight, or a memorial reef, or maybe you want to even have your ashes compressed into a gemstone. Trust me, there is a business that is willing to oblige. As one of my favorite movies, Tombstone, my favorite line from Tombstone, I'll be your huckleberry. There is a business out there that is willing to be your huckleberry. Those are some reasons why you might choose to prepay or pre-plan a funeral, and there's all kinds of resources out there. 2 of them would be www.funerals.org, and the second one would be the National Funeral Directors Association website, which is www.nfda.org, where you can go learn more. And the last thing, as with every week, we're going to end it with a quote, and this one is from Mahatma Gandhi, and it says, live as if you were to die tomorrow, learn as if you were to live forever. And with that, that's Weekly Market Commentary. What do you got, Jim?
Andrew, anytime it's too good to be true, right? It's too good to be true. And I just feel like, we've had 6 or 7 weeks of unprecedented market increases since the beginning of the year. And whenever I hear records, and whenever I hear the words unprecedented, I get a little scared, just because I've seen this. I'll be 45 this year, and I've seen this happen 3 or 4 times now with various bubbles, tech bubble and dot-com bubble, and all other kinds of bubbles that seem to form. I get the feeling we're in another cycle of when the market goes up and no one knows why. Isn't that a concern? Like, because people are kind of shaking their head. It is. Isn't that worrisome to you?
So the S&P 500, which is the 500 largest domestic stocks, is up 6.4% year to date as of Friday. You guys, that's like what is that? 45 days worth of trading. It's already up 6.4%. So yeah, we've seen a really high start to the year. And as I always say, we're not doing this podcast to give investment advice, but more observations. But I think you're right, Jim. If it sounds too good to be true, it is. So I just say, hey, watch carefully, move with determination and with a purpose, as you think about the things you want to do, and you think about your investment strategy, and make sure you're working with your professional closely, because these type of markets do have a possibility for volatility, and we've seen that for the last several years. So I think as we watch these things transpire, it's just really important to keep a clear, level head about your investing, and surround yourselves with people that are going to help you avoid confirmation bias and things like that help you to want to believe that it will continue forever. Because hey, markets expand and contract. That's part of an efficient market, is rising and falling. And so yeah, with that, be wise about your investing.
I think that's good advice. I'm not complaining. I've got money in the market right now, and it's doing fabulous. And I go out and look at the graph, and it's pretty impressive. But it is one of those things, I think, from an investment standpoint, to just be wise about what's going on out there, and read. If it's too good to be true, it usually is. One question on Europe, of course, with Greece having all the problems that it had last year. And now Germany is reporting, some surplus, which is probably a record for them, that a country actually created a surplus, because very few actually do in their monetary policy. Has there been any talk of, is Greece stable at this point from a financial standpoint, and has the EU really stepped in and shored them up in a way that has put that much faith back into the European Union?
You bring up a good question, Jim. So Europe is still kind of dealing with all of the craziness with the different countries that have run into some fiscal problems in the last year and a half, 2 years. And so there's still a lot of what's called austerity measures and different covenants that have to be met for countries such as Spain and Greece to be able to keep the support that they're getting from the EU, specifically Germany, who's the kind of the linchpin in the EU. And so, as we watch those markets, we're still watching to make sure that Greece is going to meet their obligations, because they made some heavy promises about cutbacks that they were going to have. They call those austerity, which is, I think, totally a government term. But
never popular. Cutback is never popular, but austerity.
Austerity, hey,
that sounds like something you're doing. Nice.
Kind of like sequestration, right? So they made some promises in terms of cutbacks, and now it's time to see if they're going to hold to those, because they're really having some unrest in terms of people, their citizens, saying, hey, these cutbacks are significant and affecting the people. So they're still kind of up in the air. We got to make sure that they're actually going to follow through.
We probably have some years to go before we know that. We know that for sure. Well, it's good to hear Germany's in a surplus. I will actually be in Germany the last 2 weeks of March, and I'm looking forward to just about 10 days of a little vacation, taking my mom over there. And bad for me because the dollar is weak against the euro at this point, and so I'll overpay for everything. But I'm looking forward to getting over there and spending the time in the land of surplus.
In the land of bread and honey.
Yeah, milk and honey flowing down the Rhine. Well, I'll remind folks that if you want to get a hold of the market commentary that Andrew does each week in advance, and get it in weeks when maybe we miss the podcast, send Andrew an email, andrew_hunt@guiderockcapital.com, and put subscribe in the subject line, and he would gladly add you to the list, and you can get that each and every week. And be sure to visit Guide Rock Capital out at www.guiderockcapital, all one word, guiderockcapital.com. Follow Andrew on Twitter. He's just Andrew D. Hunt out there, and get all the show notes to this show out at theaverageguy.tv. Now, Andrew and I say thanks for listening. We'll catch up with you next week. We will be here. Remember, be smart about your investing.
Thanks, guys.
Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.